Okay, today we're going to, I guess you could say, call this video the politics of housing. I'll get into it to a second here, but you'll see where I'm coming from. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is the 13th of April. We're getting to that halfway point here in the month. Randy Patrick here, putting the realism back in real estate. Hope you are doing well. Haven't been doing that many videos lately. Reason being, I've been out in the field quite a bit, looking at properties, trying to hunt down deals. It's a tough market, and you got to go out and do this type of stuff. But feet in the street is where things are at, and it shows you what's going on in the marketplace. That's how you generate opportunities, which we hopefully will be getting some as the next few days go on. So first of all, if you're not already a subscriber, if you could do me a great favor and smash that subscribe button, I'd really appreciate it. And secondly, if you think you're a subscriber, could you please check and subscribe anyway, because I'm losing subscribers still. Had a little bit of an uptick the past couple weeks. I mentioned this to everybody, and then I saw it drop down again over the weekend. So if you could do that favor, that would be wonderful. And this video today is brought to you by our friends at Foreclosure.com. Go to gethousingdata.com. Why do you want to go there? Because you want to check out what's going on in your local market with respect to distress listings and properties. That's where the equity's at. That's where the opportunities are at. You're not going to find this stuff on the retail marketplace. Go to gethousingdata.com. Check out what they have. 7-day free trial. It's Foreclosure.com is the best location, best place, best provider of distressed property listings across the U.S. Okay, so I'm going to start really today with respect to the differences in what we're seeing in the marketplace here. So this just came out on the 12th, which is yesterday, saying forbearance has dropped to the lowest level in a year, the MBA finds. MBA is Mortgage Bankers Association. And the reason they're saying this, well, it's because of economic stabilization drove one of the biggest mortgage recoveries on record, according to the MBA. So this is an example of what I'm going to call a pro-housing, feel-good type of story. Well, let's go back to a year ago. What was happening a year ago? The end of March, the first couple of weeks of April, we were seeing massive amount of people subscribing to forbearance plans with their lenders, bank servicing companies, whatever. So if you think about it, from about this point, that last few weeks to where we are today, that's been over a year. It's been 12 months now. So when we see a lot of these drop to lowest levels, there's no talking about, well, who's dropped off because they dropped off. Are they making their monthly payments? What's going on here? So I always find that, we're talking that, what they're saying now is that the current amount of people in active forbearance plans represents 2.3 million homeowners. And sure, that's a decrease from the previous couple of weeks. We've been seeing that trend going down. Overall, forbearance exits increased to their fastest pace since early November. Well, I think there's a reason for that, but we don't hear it in the way it's spun here, and that's my opinion. But it's funny that we see a lot of dropping of forbearance plans when how can I put it? We see the dropping of forbearance plans, numbers looking good when we know that they're expiring, and maybe we'll see like what happened the last times when people dropped forbearance plans when they had decreases. Well, guess what? The next few weeks it went back up again. Why? Because people were exiting and then they're going back into it. Okay, so let's not get too excited here, but I want to show you that what they're basically saying is the fact that this is a good thing. And of course, I mean, listen, if people get out of forbearance and can resume their mortgage payments, good for them. I mean, there's nothing wrong with that. That's great. However, I just don't know whether this is a realistic point of view and a realistic set of data that we're looking at here. The NBA sample for this week's survey includes a total of 48 servicers, 25 independent mortgage bankers, 21 depositories. So they're taking samples from each one of these lending groups, etc., and then they're putting together their analysis. This group that they spoke with represents about 74% of all the outstanding loans out there. So they're basically taking 3/4 of the mortgages and then taking samples from those providers and trying to come up with their numbers here. So that's why things are there's discrepancies, and we'll see what happens. But I always want to comment and say, let's not jump for joy and go, look, everything is great because of an economic recovery, when we know that this is the time period when all these 12-month forbearances are, we'll say, ending, coming due, and we'll see what happens after the fact. All right, so let's hold our horses here. Now, this is very interesting, and I want to comment on this because this happened in Florida. So the Florida Circuit Court has ordered to move pending foreclosure cases. So here we are, we're in Florida. We're a judicial type state the way our court system works here. And right now we've seen, we're seeing some cases go through. Things are still slow. We're not seeing the volume that we thought we would. Things will pick up because of the backlog, etc. So what we have here is Supreme Court based at Florida saying, let's get going, people. Let's move forward here. And what they want to do is basically every case is to be reviewed to determine if it's complex, streamlined, or general. Most foreclosure cases will be either a streamlined case or a general civil case. What that basically means is the court system is preparing themselves for the future. And if they're preparing themselves for the future, my interpretation is the fact that they expect that they're going to see an increase in volume of foreclosure cases. So therefore, let's put things in place now that's going to aid the courts and not have what happened the last housing crisis, which was slowdowns, a big mess here and there. So they're putting things into perspective now here. So ultimately, I'll have the links to the article in the information section of the video, but what they're saying is that they're going to have an increase in case management conferences scheduled by the courts, and they want to push things through, okay? It's anticipated the Florida judges will deny continuances and push the pending foreclosure cases to judgment and sale, even on cases impacted by the federal foreclosure moratorium or cases impacted by the new proposed CFPB rules. So ultimately what the state of Florida is saying here is going, let's move this forward. We have a housing crisis. We have a lot of things going on here. Let's move this forward and get sort of, the market back to normal, get houses out there available for people, just move things along. That's what they're doing here. And I guess you could say that they talked about here, aggressive case management. People are going to have to realize that when they come to court, they're going to be ready to go. If they're not ready to do that, they probably shouldn't be filing complaints. That's with a high level of generality. So they're talking about the lenders. So the lenders are filing. They better be ready to push it through. You as a homeowner, if you find yourself facing foreclosure, it's not going to be the same as it was back in the last housing crisis. There were people that stayed in their homes for 5 years, 7 years, even 10 years, if not more. I can tell you there are still people in their homes right now that had foreclosure cases during the last housing crisis. For whatever reason, they've been able to work between the seams and have the law on their side for various reasons, but they're still in their homes, all right? So, that's the whole point, is that, the court systems were overburdened and it just was a mess. Well, they don't want that to happen anymore. So they're going to streamline, and that they're telling us right here. So I guess you said this commentary is quite straightforward. It boils down to the fact that, some Florida circuit judges are known to be proactive with moving their dockets regardless of the federal investor moratorium or CFPB rules and regulations. This is a repeat of the same issues during the Great Recession, a backlog of cases and judges becoming more proactive to clear their dockets. Will history repeat itself? Most likely it will look a little different, only time will tell. But in the end, the judges are going to move things forward. Instead of slowing things down, we're going to see an increase, which will impact the housing market down here, at least in Florida. It's going to impact people who are in the foreclosure process, people thinking they've got more time to mess around, etc. So just be aware of that. This was trending already before COVID. I can tell you that I saw foreclosure cases starting to move within 6 to 8 months back in 2019, as opposed to the 2 to 3 years it normally takes. Reason being, the judges and the courts are going, why do we need to draw this out if there's no complaints or no pushback from homeowners? Why do we need to make this, why do we need to suck up the resources, essentially? So they're pushing things through. Typically what happens is when a state like this decides to move forward, other states may adopt the same practices when they see how positive it works. So really, this came out at the end of March, and they're looking to put this in place starting May 28th. So basically, in about 6 weeks, they're going to start to move stuff forward. So it's not like you got 3 or 4 years to wait in your house anymore. Things are going to happen a lot quicker. So homeowners, beware. Which takes me to this Q1 2021 foreclosure action trends. This comes out quarterly by auction.com. They basically have this wonderful heat map out there on Tableau. You can take a look at it. Ultimately, what it boils down to is the darker the green, the more foreclosure auction trends that are happening, quarter over quarter basis. So what it boils down to, it says, while the Midwest and Southeast continue to lead the country in the return of foreclosures relative to year-ago levels, Some big quarterly increases in typically high volume states like New York, up 183% from Q4 of 2020, and New Jersey up 76%, indicate the map may look green in the Northeast in the next quarter. So things are starting to already pick up in different locations. This was also foreshadowed with the Foreclosure Inflow Map, which was posted by these guys a few months ago. Although not yet green, meaning foreclosure volume return is above the national average, California and Illinois are two high volume states with a solid rebound in foreclosures for Q1. So they're going up about 25% or so. So that's the light blue. Texas at only 13% of pre-pandemic levels was a bit of a surprise. It was 20% of pre-pandemic levels in Q4 2020. This was also foreshadowed in the aforementioned Foreclosure Inflow Map. This is also likely to change in Q2, at least based on earlyauction.com data from the April Super Tuesday foreclosure auction event, as well as intel from on-the-ground people. Now, I could tell you that I didn't check this for April, but for example, in Texas, in Harris County, which really takes care of Houston, they typically have their foreclosures once a month on the first Tuesday. Well, due to COVID and the fact that at least in Harris County, or maybe it's all of Texas, that foreclosure auctions are actually still held at a location where you go to bid in person. What happened was those auctions so the auction was scheduled, and then they're like, well, because of COVID, we're going to postpone. So people who had their homes scheduled for auction got another 30 days reprieve. So I know that January, February, March, those were pushed off. I didn't take a look before the video on whether April's was pushed off. But for example, that could be happening in many locations in Texas. That's why Texas, even though there's a significant volume of pre-foreclosures ready to go, they're not holding auctions because of the pandemic and COVID-related things. So again, realize that when we take a look at what's happening, the numbers are dramatically lower and slower because of the environment. And when things open up a lot more and things change, it's going to be free for all here. So please keep that in mind as well too. And ultimately here, my last video was about the CFPB, Consumer Finance Protection Bureau, and the fact that they had proposed a lot of we'll say they number one warned lenders, banks, servicers about the impending forbearance, people coming out of forbearance and the chaos that's going to bring. They have all these proposed rules and regulations they want to change. Now, that's nothing's carved in stone here. I want to make sure people understand it's not carved in stone. And now we've kind of got people saying, well, does the CFPB actually have the authority to postpone foreclosures and do the things they said they wanted to do? And I guess you could say that really is, it's kind of interesting because we're seeing more of that. The CDC put in their foreclosure and eviction moratorium, and the CFPB is doing their thing here. Well, do these groups actually, can they demand that? Can they enforce that? And is it legal? I guess that's the question. And for example, a gentleman here who is a CEO of a consulting firm and was the former CEO of the Mortgage Bankers Association said, his concern is that the Bureau is overstepping its bounds and violating, in essence, agreements that have already been previously made. He said, the whole point of the CFPB saying this is that, hey, let's streamline the process. Let's get the servicers involved. Let's anticipate the volume. Let's be proactive so we don't have repeats of the chaos and when people were losing their homes unnecessarily, the last housing crisis. And I'm for that. I mean, there was a lot of damage to a lot of people that were unnecessarily done last housing crisis that could have been avoided, but were not for various reasons. And hopefully some of that stuff's cleaned up now. Should be, because we're in a better situation with better data, better processes, whatever. But still, it's that, what's the volume here? We're not sure, right? We're not sure here. So ultimately, in the end, as far as I'm concerned, is that the CFPB is being questioned, and this is really important. It says what they are doing is getting involved in a very complex process and maybe forcing servicers to violate covenants of their investors who bought the loan, and that's the real challenge. So you see, all these loans are sold on the secondary market in mortgage pools and tranches, right? And there's terms and conditions to go along with that. So servicers and lenders just can't go in and change terms and conditions on the fly, people's mortgages, etc., because it violates those secondary things that have already happened. So this really is kind of a kind of a question as to, can they really do this, and how is it going to affect other relations and other things down the road here? That will be, I guess, determined in the future. But ultimately, the proposal that basically that they came out last week with it it has comments due May 11th, and it would not go into effect until the beginning of September. So really, when we take a look at this, we're extending, FHA is already extending, I guess you could say, forbearance, which should have expired, the first wave, March 31st. They're giving it 3 months, which gets you to June. 3 more months, they're giving it another extension there. Maybe it'll get you to the end of September. So when these guys come out with their findings and what their recommendations are, you basically got 3 months until 2022. So who knows what's going to happen? They'll probably get some sort of extension or some sort of something set up here to extend it one more time. But we're kind of running out of things right now. So an example of just, people are spouting off and getting in the way of things here for whatever reasons. But do they have the authority to do so? Who knows? And that's the thing. Like right now, everyone's going to say, like, who's not going to support this, right? All the people are going to say, we'll support all these things. But in the end, can they really do so? And it's the people with the cash and the money. They're going to say, maybe you can't, based on the covenants that were already decided, years ago, based on the way these mortgage pools work and stuff like that. So please, like I said, all this is being proposed and talked about. It's not carved in stone. It's not a decided thing whatsoever. But this can lead to many more issues and many more questions as time goes on. So as far as I'm concerned, really, I guess you could say, actually, this is important too, because like any reaction, there's always something that goes along with this. So there's anything that we do, there's always, we'll call it the innovators. And what do the innovators do? They find workarounds to figure stuff out and beat the system. So this, where my arrow is here, is kind of funny. It says some of their comments are, whether you agree to disagree with the proposal, the industry should also prepare for the consequences of such a moratorium, including the fact that the strength of the housing market today may suffer, reducing property values and increasing deficiencies post-sale as an abundance of distressed properties flood the market in the next 24 plus months. It will also introduce an increase of strategic defaults where the proposed regulations weaken the ability to enforce delinquency consequences. So strategic defaults are, you know what? I'm just going to not pay my mortgage and I'm going to let it go to foreclosure because I don't feel like paying for my mortgage, because in the end, maybe I'm over leveraged, overbought, whatever reason. In the end, it's better for you financially to not pay your mortgage and do what you need to do. So that's what they're saying here. So like the last housing crisis, a lot of people did what's called strategic defaults. I mean, instead of whittling away your cash in your bank account, you decide, I'm not going to paying on a mortgage where you can't sell the property or you're not covering the rent, etc. Well, you just stop paying and you took your lumps at the end. But in the end, you probably netted out better because that was a strategy on people's part. So like anything, when there's more forgiveness and more looser and exit strategies here, people will find ways to take advantage of it. That's just the way it is. So that's sort of my perspective on things here. So ultimately, in the end, what we got here is that, does the CFPB have authority? Not quite figured out yet. It's still too early because comments aren't due from people, investors, lenders, whoever, until the second week of May. So we'll see what happens and whatever they implement at the end of September. All right. So I call this, said the politics of housing. That image you see here is probably the number one used housing image on articles and stuff out there. The reason it's used, because it's free. If you know where to find it, this is a free image. No royalty rights there. So I look at it going, you're either pro-housing or you're pro-housing bubble crash crisis. That's the way things seem to be set up here with mainstream media, with what's going on, etc. So if you're pro-housing, and please understand here, I want to be very clear and crystal clear in all this. I'm for affordable housing, people getting homes, people enjoying their homes, etc. I'm not a proponent of property values going sky high, that they are unattainable for the majority of people that are out there. All right, I think that everyone deserves the ability to live in a home and enjoy their home, etc., without being pressurized, with mortgages that they shouldn't qualify for, etc., etc. So that's kind of my blanket statement here. So when I look at the pro-housing commentary and perspective, here's what I see out there. Forbearance numbers are going down. Every week, I see little articles going, hey, forbearance dropped a few points here and there. Things are good. Home equity is still increasing. Every month, whether it's Case-Shiller or CoreLogic or Redfin or Realtor.com, what do we see? We see home equity year over year, month over month increasing. The past couple of months, double digits. So equity is increasing. Jobs are coming back. So if you follow the Bureau of Labor and Statistics and other information, you see that, guess what? Jobs are coming back. There's less people in trouble. People are getting rehired. Everything is good. Stimulus money is come out to people. Stimulus is helping. The economy is growing. So everything is great here. Mortgage rates are still at record lows, and they are. They are still at record lows compared to a couple years ago. So people can still get good mortgages. We've had very, very low rates. People are refining, etc. Now, lending standards are better than before. So a lot of people who believe that we're not going to have any housing issues is because lending standards are better than before. All right, that's a statement. We'll see what happens as time goes on. Oh, simply sell and move on. So people who are under forbearance protection or have delinquencies and issues, well, it's not like, hey, we're not going to have to worry about things because you're going to have all this equity. When you're out of your forbearance, you still have financial problems, just sell your house and move on. Okay, where will you go? I don't know, but everything will be okay because you'll be able to sell, move on. We have all this equity. All right, they don't talk about what goes on behind that. Government is getting involved, so and asking and getting more control of what's happening, or trying to exercise more control. All right, that's a concern, but that's what you see when a pro-housing market. That hey, we're taking care of you. We're doing things to protect the people, the citizens of the country. All right, a lot of discussion is based on the fact that this housing bubble, potential crash, crisis, whatever, is nothing like the previous boom, bust, crash crisis. So mortgage meltdown, speculation, the whole bit. People are saying that there's no speculation going on. Oh, really? Go out in the field, go out in the market and see what's happening with respect to who's trying to flip properties and wholesaling and rentals and all that type of stuff. When you take a look at what's happening, the competition for retail properties, etc., you don't think there's speculation going on there? Okay, why would people be up buying and driving price higher and higher if they didn't think that if they ran into a problem, they could simply sell it at a profit or cover their losses? All right, that's the scoop. There is speculation going on, and also I call it spinning the narrative. So as I always mention, housing is in a big narrative. You're either like, this is a pro-housing narrative is here, and I understand it and I get it. So it's just how, I guess, whatever side of the fence you want to sit on. Now, if you're a pro-housing bubble, housing correction, housing crash person, well, this is your perspective here, which you kind of know where I lie on this, right? Forbearance numbers aren't accurate. We don't know the true number of the forbearance numbers because they're samples. And quite honestly, I think the people who are providing the samples and the analysis are conservative underreporters of statistics on a general basis anyway. And I've talked to other people I know in the industry who believe the same thing. Many people are still unemployed. Stats are not accurate. Okay, more and more people are dropping off the unemployment calculation because they're disinterested workers, basically. Like, they've been out for so long, they don't count as a stat anymore. And you're counting part-time jobs, which means, yeah, I've got a job, but I've got less income. I've still got financial issues. So that's our situation there, right? So I still think that those aren't accurate as well too. Mortgage rates have risen a bit. When mortgage rates do rise, it does affect buying power. So and apparently, what the Fed says, that they're going to continue to move some stuff up. The housing market is manipulated. You could tell by controlling with respect to the foreclosures and things like that, and the forbearances. It really is. It's choking the market. So the government's involved in that. Lending standards are not better. So when I look at things lending standards were tightened right after or as the previous housing crash was happening. It was difficult for bona fide, real, owner-occupant primary home buyers to get mortgages because the lenders were all scared about the next underwriter makes a mistake is going to lose their job. If that house goes into foreclosure. Well, lending standards, yeah, they got better, but they've also gotten looser over the past little while. So we're, and what's a perfect example of that? Look at the FHA delinquencies. When over 17, almost 18% of FHA loans are delinquent, something tells me that the standards have not increased or they're not necessarily better. All right, so you got to keep that in mind too. The simply sell and move on, well, delinquency hurts home equity. So yeah, we got this home equity, but realize that if you're in forbearance is not forgiveness. And guess what? You're going to have to ante up for that difference, and that cuts into your equity. All right. And there's other things I can go down that's going to cut into equity to closing costs, commissions, whatever it is. So if you want top dollar for your home, you're going to list on the MLS of the real estate agent. They're going to charge you a commission for it. You're going to have closing costs, prorations, etc. You're going to have to pay off your equity. And to get that high dollar value, are you going to do curb appeal and make repairs and improvements? Or are you going to put money back into your property so you can sell at a higher dollar value? So if you don't have the cash now, that may not happen. So that may not work as well as people think. Data companies talking about potential foreclosure volume. So yes, since the fall, various data companies that produce, or analyze data have been saying we expect to see X number of million foreclosed properties from 2021 to 2025. Okay, that's what was being said. That's still being said. We're also seeing warnings about foreclosure volume issues. So, we just see the recently so we've seen, data companies talking about the volume. We've now seen the CFPB sort of leading the charge going, hey man, we're going to have problems here. Everyone better be ready. And now we see the courts putting, with Florida here, are putting pressure on the process. So, I look at this going, the data companies see it coming. Clearly the CFPB sees it coming as well too. They're not qualifying it. And when when the courts go, we got to, get ourselves ready here because we're going to get this onslaught of volume. Seems like everybody's seeing the potential volume here, but we're still not acknowledging that or believing it. So that's to me, that's when you see, this is not just one group we're talking. This is the third to fourth group now who said, third group. I'm not including economists and analysts that go through this stuff. Okay, so people are expecting, and people who have the data and have the knowledge and see what's happening in the marketplace right now and have the experience are suggesting the volume will be there. We had better be prepared to handle the volume. All right. Challenging of authority. Well, people are getting tired of this now. The CDC, we have various landlord groups and local, attorneys, getting lawsuits filed against the CDC because of the eviction and moratorium and renter issues. All right. CFPB is now stepping in. Okay. Other parts of the government are trying to control the real estate market and stuff here. So when I see all this kind of happen, to me, it's like they're trying to stave off what's going to happen in the future as best they can, which means there's more to meet the eye, more than meets the eye with what's going on right now. Certain people are very quiet, so I'll just leave it at that. So the people who used to talk about how great the market is back, a year ago, whatever, they're not speaking anymore. So to me, when those people are suddenly quiet and they're not offering quotes or their commentary on the housing market because they don't want to, or it's better for them not to, so to speak. So that's a telltale sign. The institutional investors are ready and waiting. As I always say, pro-housing bubble, that we see it happening right now. They want to buy, everybody wants to buy property and waiting for it to happen. And again, like the pro people are supporting the narrative, we're trying to debunk the narrative, saying that it's not a good scene here, that, you've got two markets happening now, but the next one that's going to happen in the future is going to be a wild ride the other way down. So it really is, what do we do here? But it's just so interesting that for me, I think this is all happening. It's all peaking right now. What's going on here? Well, it's getting close to go time, right? So what's go time? Well, it's go time, right? Go time is things are going to start to let loose, and let's get at it, right? So that's a quote from a movie. If, maybe you guys might know the movie I'm talking about here. But the whole point, though, is that forbearance is being extended. And CFPB is coming in saying we got to get the servicers, and the courts are now jumping on, going we got to streamline the process. So it's kind of like everybody sees this, we'll call it wave of foreclosures. Is it a tsunami? Is it a wave? Who knows what it is? Okay, but the point is that it's being talked about and it's being, I guess it's being acknowledged. So for me, it's like that's the issue right there. Like it's coming. We can do the best we can. Various groups are raising the alarms, right? So why would they do that? Why would they say it if it wasn't going to happen? Why would they say it if they didn't believe it was going to be a problem? What are they hiding, right? What information do we not know about? Who are we supposed to listen to, right? Who's going to talk? Like, do you believe this, or do you believe whatever? I know people are unhappy going, I should have bought a property 2 years ago because I'd be 50 grand cheaper than I am today. And then I got others who are going, you know what? I'm still not going to buy because I know it's going to happen. We're just going to wait it out. So should you listen to? Who can you trust, right? Which is difficult in our environment we're in today. And I get it. Listen, I get it completely here. So that's the scoop on that. So I just noticed that I think we're at a really critical point right now. As I said, we got two housing markets going on. We have high appreciation going on. We have shifting of metro bubbles or markets. What will happen in the future with the distress, the forbearance and foreclosures, the fight for control of the marketplace, who's is it the government, is it Wall Street, is it the people, is it the real estate agents, whatever. The question is, how will this all interact, right, and intersect? That's going to be the question for the future. As I mentioned, we haven't got the new numbers yet for March, but 3.354 delinquencies according to Black Knight. I think it's underrepresented, as you know. That's basically that's Black Knight. Again, I'm not knocking them, but I'm just saying that they have a history of conservative number postings over the years. Simple as that. Discussion is talking about how how equity is going to save everybody's butts, but in the end, you're eating up your equity. It's not going to happen. And what else do I got here? It's the same slides I show over and over. Short sales, other pre-foreclosure sales are poised to become more dominant share of the marketplace. It's happening right now. I can also tell you that, the amount of, I guess you could say emails and contacts that I get about, people talking about short sales and real estate agents or people that do negotiation for short sales or realtors supplying information on short sales, like all that discussion has and emails and postings, that's all increased tenfold. So, it's almost like we all know it's going to happen. Even these guys are talking about how pre-foreclosure sales will set to dominate the distressed home market. So we know this is coming. It's just a matter of, we're playing the politics game here. We know distressed sales don't even exist now. Why? Because due to the control of what's happening in the marketplace, nothing's hitting the market and nothing's, there. But we know that foreclosure fines are quietly increasing. We see it in those heat maps, okay? More properties are scheduled for foreclosure auction. It's going to increase according to some of the states here. I've told you before that I am seeing an increase in homeowner association and condo association auctions across the board, right? Because they don't fall under mortgage moratorium controls here. Also seeing tax deed auctions. They're back coming up now. There's no moratorium on those anymore. Tax deed is not a mortgage foreclosure. It's a whole other ball game. And I'm seeing an increase now in tax deed auctions getting set for the future. So to me, this is like this, people are getting back to normal here on the regular real estate plan. All right. Next opportunity, distressed properties. Owners are going to have to sell. Investors will have to liquidate. As I said, uptick in all the auctions and the fines. Short sales being listed, eventually the REOs. As I always go, more will be out there than what's being predicted. We're not seeing the true numbers. You've seen this before. Why do I think it's important? Well, because short sales have equity, okay? So this is how we're going to get part of our hands in the market. We're going to beat the institutional investors to the auction by connecting with the homeowners and talking to them about short sales or other pre-foreclosure, just discount sales if they have equity. So they won't lose it all at the auction, all right? And that's the best way to go. So having said that, everybody, thank you for the views, likes, comments. Please subscribe if you're not already a subscriber. Connect with me if you want more information, but I think we're heading to that point now. For me, it's one more, when more and more groups, people, etc., are trying to anticipate the volume for the future, that should tell us something that we need to be prepared, and things are probably going to happen at a faster pace and more volume than anyone's anticipating. That will remain to be seen. All right, guys, take care. We'll look forward to talking to you next couple days.